Hey everyone, Ian King here at Smart Profits Daily. And today I'm going to talk about the three narratives that are driving Bitcoin to $15,000. Now, you've probably seen recently that the price of Bitcoin is at $15,000. It's up about 12% on the week as I'm recording this video. And that puts it up 100% on the year. Back in January, it was trading around 7,500. But there are three specific narratives that have driven the price of Bitcoin higher in the last couple of months. And the first narrative is this idea that Bitcoin is a store of value. And at a time when governments are printing lots of their own fiat currencies, running huge fiscal deficits to fight the coronavirus, and we're just seeing more and more of it. If you look over in Europe, where Germany and France have recently locked up their economy, and perhaps in the US, where we're going to have a stimulus package by the end of the year, it means that there's more government debt. It means that the money supply is expanding. And it gives people a reason to own an alternative currency or an alternative store of value. Now, for thousands of years, that alternative store of value was always gold. And just in the last 10 years, you had Bitcoin arrive, which is a form of digital gold, or can be looked at as a form of digital gold, because it's not controlled by a centralized government or a central bank. The price of Bitcoin is purely priced by what the market will pay for it. It's purely supply and demand. There are 21 million Bitcoins in existence. About 85% of that has been issued so far or mined. And right now, the total market cap of Bitcoin is about $275 billion. Now, if you compare that to gold, it's only a fraction of gold's $7 trillion. So if Bitcoin were to eat more market share from the gold market, and it looks like it is, especially because the younger generation seems more willing to want to hold gold or more willing to hold Bitcoin than gold, it means that the price of Bitcoin is going to continue going up over the next couple of years or even decades. Now, the second narrative that's driving Bitcoin is this idea that institutions are finally arriving to the investment space. And it's not only institutional investors, as you think of as hedge funds or mutual funds. What's driving the price is corporate treasuries are moving out of their fiat currencies. Remember, corporations that sit on a lot of cash, like tech companies, might be worried in the same way that investors and citizens are worried about their own government's cash, right? If the government is printing more dollars in the US, eventually it erodes the spending power of that dollar. So you want to own something that's a store of value. Now, you can do that by owning government treasuries, which pay a very low of interest, or you can do it by owning some type of alternative currency or store of value like gold or even Bitcoin. And we've seen just in the last couple of months, two companies in particular, one MicroStrategy, which is a tech company, put $500 million of their own corporate treasury into Bitcoin. So they moved all their US dollars into Bitcoin. And secondly, Square, which is a company that's run by Jack Dorsey, also the founder of Twitter, moved $50 million. So a smaller amount for Square, but you can see they're trying to diversify their cash. And I think this is a trend that's going to continue. You'll see more companies. And if you think how much cash companies like Apple and Microsoft and Google have on their books, also Facebook, you can see that there could be a bid for Bitcoin in the future from these corporate treasuries. Now, lastly, and this is the most important reason, the third narrative of why Bitcoin is higher is because recently PayPal announced that they're going to allow for buying and selling and holding of cryptocurrencies on their platform. So not only on PayPal, but on their app called Venmo. Now, PayPal has 350 million users. So a majority of them already have Bitcoin or have been introduced to it, but it's going to lower the friction getting into this market. So you can have an app where you hold US dollars on your phone and you can press a button and you say, okay, I want to have Bitcoin instead of having these US dollars. The other functionality is the payment perspective. So you can actually use Bitcoin to spend on the app with merchants that you're buying something online from, but they'll do the conversion for you. So let's say I want to do a transaction where I want to buy a good from somebody that's listing something on eBay, and I'm going to use PayPal to pay for it. I want to pay in Bitcoin, but the merchant wants to receive US dollars, and PayPal will do that conversion for you. So I'm just using Bitcoin and they're receiving dollars, or vice versa. They might want to receive Bitcoin. I want to spend dollars, and PayPal does that transaction for you. This is huge because there's 350 million users on PayPal's platform. They're significantly larger than Square, and it is just very bullish for Bitcoins because you're going to have an on-ramp that lets people get into Bitcoin and the rest of the crypto markets with less friction simply by using this app. So those are the three big narratives driving Bitcoin. The price is at $15,000 right now. Number one, the idea that fiscal deficits are increasing around the world because governments are fighting the economic slump caused by the coronavirus. Number two, corporate treasuries are moving their US dollars into Bitcoin, and we're just seeing the first signs of this. And number three, the idea that PayPal has 350 million users that can now easily buy and sell and hold Bitcoin on their app. Now, one last thing I want to say is that Bitcoin is up about 50% in the last month, and this is a very volatile instrument. So if you're looking to buy it, just be careful. I always tell people in 2017, even though Bitcoin went from 1,000 to 20,000, which is a 20x return, there were 7 pullbacks of 20% or more along that time frame. So if you see it when it's up 10 or 15 or 20%, don't go all in on it. Just take a breath, maybe buy a little, and just understand that it's very volatile, and you could be hit with a significant sell-off at any moment. So just be careful out there. Thanks for tuning in for this video, and we'll see you next week. Take care.